Alrighty, folks. Just making sure the bit rate's good and getting everything set up. Seems like we're fine, at least for now. Alrighty, awesome. Yeah, so for anyone who's just tuning in, we are covering New York Part 2. Just spoke with IT Trader in New York Part 1, covering institutional smart money concepts, ICT concepts. And of course was a fire session. Lots of knowledge dropped. Now here we are back with SPDas to continue from the London coverage. And of course, this is Elliott wave theory, classical trading. Absolutely fire. Everyone needs to keep track of the fundamentals. That's what it's all about. That's what we preach. Learn to trade and invest on knowledge, eliminate hope and fear. And yeah, I'm going to end with that. Just going to pass the microphone over to SP Das in just a moment. SP Das, the trading floor is yours. Ready to rock and roll.
Yeah, thank you very much, Igor, and hello and welcome back to the New York Open. Just 3 minutes past 9:30 a.m. Eastern, and we are about 2.5 hours away from the swearing in. If I'm not wrong, it's around 12 p.m. So yeah,
That's correct. Yeah.
and yes, and the markets have now. So it's so that's how the story has unfolded now. 4 days, I mean, so 12 sessions that we have taken here since the 14th of Jan or around the 15th of Jan. So after almost 5 days of consolidation, uh, 5 calendar days of consolidation, and we are now seeing it happen all on the north side for euro, and it's good that we could enter because it gave us a lot of opportunities. I think that was missed. Then we got one, two, and three. The third opportunity was right around the last session, right? So maybe a triangle just completed, or it could be a running flat, whichever pattern. We are not concerned about too much concerned about patterns, but we are really happy to see, or glad to see that the wave stories have unfolded as we were discussing. And now, if we continue from this point, it is a breakout after a sideways consolidation. So it's not going to give up very soon. Breakouts are remember ripple breaking out of the triangle. So ideally, it's not going to give up soon. Or I need to change the degree here, and it is just beginning to unfold the third wave, right? And if I believe the third wave is extended, then it's going to go all the way towards the 630 mark. And if it is not extended, the first resistance is just around the corner, 30, 40 points away. But remember, it's a consolidation breakout. So it doesn't really stop so easily. And it could be just the beginning of a new rally. Now, the trading point of view, most of us, I believe, unless you are just joining in the past two session, if you have just joined, most of us have already built on the long side. I kindly request everyone to remain on the long side because this story is just beginning to unfold. Even if there is a corrective decline, it is going to be temporary. I don't suggest to remove or move the stop loss at this point in time. You never know, after the break of 450, there could be a good corrective drop before the next wave begins. But if I go with the history and experience of how the breakouts are are normally breakouts normally turn. If you remember, we had drawn the path for breakouts, like like what it needs to break out into the buy zone, and then it comes back to this to the back testing like that, and then picks up. So this is another possibility. Okay. I think I've zoomed in enough and drawn and done the trend line. Okay, there is a miss on the trend line. Possibility, if we look at the entire 4 months decline, then okay, this trend line is not incorrect. It is the immediate trend line or the inner trend line. That's what we call. And this one is the intermediate trend line. Now, the significance of those two trend lines are really important, and just take 1 minute to emphasize on what's happening here. Now, the immediate trend line is giving way, so the buy, its prices are now entered into the buy zone, but it's still into the sell zone of the intermediate trend line. So it is quite possible it hits the intermediate and takes resistance, and then hits back on the backside of the trend line, immediate trend line, which is now acting as a support, and then picks up from there. Right? So this story can, I mean, that would really be very meaningful. It goes up another 50, 60 points, takes out that resistance, gets the resistance from the intermediate trend line as well, drops back, hits the backside of the trend line. I can draw this line as well. See, trend lines are the best tools, one of the best tools for a trader. Uh, it's nothing wrong in depending on the RSIs, but if you're good at drawing trend lines in a correct manner, you'll really be very happy that you did so. Because I see this structure could be unfolding as an inverted head and shoulder, where you have the left shoulder, the neckline, and the head, which is down, is inverted. And here the neckline could be taken out maybe in the next few hours or so, and then back. So now this zone, I mean, trading point of view, this zone is so important. I'm coming back there. So for those who are still joining, please are joining just in this session or the past session. Kindly note this area. All right, somewhere around what 325 or so, and that could also be a very good way of an extended third wave, because it could be wave one of three and wave two of three. So all stories are matching. An extended third wave, a backside test of the inner trend line, left shoulder, right shoulder combination, and and a bullish signal if you're watching candlesticks. So the next buy could come around 320, or if some time is passing, then it could push lower as well. So next optimum level to buy could be around this zone. All right, but please don't rush after the price action. Normally, when it takes out the resistance, there could be a pullback, and that's the place where you enter. But in case of this particular historic event taking place, if it goes straight up there, then ideally it's not a good thing to rush behind price action. All right, just always plan out, and that's what we've been doing all the time. Plan out, wait for the market to come there, and then initiate the trades. All right, so we again emphasize, or maybe I can keep this for the next session. Let's see how it unfolds. But in fact, it would be better that I do it again for all of us. Euro is on the long side. The dollar index now should be should be on the short side for without saying. And what a way to do, right? So quick,
Yeah, wow. Amazing.
yeah. So the quick wave count, one, and we now have wave two, and the third wave is unfolding, and I would not be surprised at all if the third wave extends before the wave four and five. So finally, it's all happening. And this is just the first time that in these sessions we are seeing it, that market is the boss. In just one word, market is the boss. It has taken into account everything or anything except for the natural disasters. Sometimes they are also taken in, amazingly, surprisingly, they are also taken in. But the point I'm trying to make here is it's not about the events that are happening outside, it's about the wave stories and the price action stories that the market is continuously telling us. Now, if we are good readers, if we can find out some patterns, there are only 13 of them really. It only takes a bit of while to practice, but if we can read the chart properly, then of course we can go wrong as well sometimes when the fundamental events are absolutely against us. But that percentage is around 10%, believe it or not, just about 10%. So, it's worth taking that risk, correct? And finally, now we are seeing price action to push because it's just beginning actually. And if you go by the by the history, it's not going to give it up so soon now because it's that's a breakout, and the third wave is subdividing. You see, if you start counting the subwaves, that is wave one, that is wave two, this is wave three. So if you go in the hierarchy, it is one, two, and then again one, two, and three. So this is a third of third wave, and the third of third waves are most powerful ones. So ideally, it would take that support out, and ideally it could bounce back and then come back lower. But I don't think it should happen today. I think possibly the next wave could be wave three, and then wave four, and then five, and it completes the smaller cycle, and then it takes a leap there and continues lower. That could be the possibility. All in all, uh, if you are not in the trade, I suggest not to rush because the risk. Okay, still, if you can afford it can afford this risk reward ratio, then it's okay to go short. But go short, not long. And if you cannot afford that stop above 110.30, ideally wait for a corrective rally somewhere in the vicinity of where's the left shoulder. Maybe you can draw the trend line here because I really love trading the trend lines. Now, if we have done correct what we have done, then ideally this trend line would just stay as it is, or just follow as the price action follows. That could become an outer line or an intermediate line going forward. All right, so let's see how the price action on the next story is unfolding. But we are good to remain on the short side, not moving the stop loss for now, but eventually we will move the stop loss, and the next techniques of locking your profits will also be applied going forward. All right, so that was the US dollar story. Gold, let's see if it is. Gold is absolutely sideways. It is a bit surprising, but it's okay. Gold moves and in its own way. That's what we have discussed. One more time, if we go by the analogy of, I took an impulse wave, need to take a correction here. One more time, the analogy of what gold could take, or the path what gold could take, is an ABC. Only two options of all the corrective options are left. Either it is going to form a flat from here. It's already done a top here, and if that is correctly done, it's either it could continue lower from here itself, or wave B could could enhance or push a bit higher. See, I tell you what, I'm not ruling out this possibility again. because of the guideline of alternation. Uh, and remember, I told you, we discussed this, if you remember. The guideline of alternation suggests that waves 2 and 4, they tend to alternate. That means if the second wave is sharp, which it was 5, 3, and 5. Wave B unfolded as a triangle. So it was zigzag. Okay, so 535, it was a flat, it was a sharper pattern. That means wave 4 has got a possibility to go sideways. Now going sideways is, it either goes as a triangle, or against this sharp pattern it makes an expanded flat, or produces an expanded flat. That's why I'm keeping this option open always. If it wants to produce an expanded flat, this point is going to go there, all right, and then reverse very sharply. It's going to take most of the traders on the long side here, and then reverse sharply, again taking them on the short side. So it's going to be it's a what it's called, ripple effect, where you get caught both sides. All right. So not getting too confident on gold turning from here. You're always keeping options open for a wave B there. But please remember, our stop loss is going to be at 27.55. If we get stopped out, we get stopped out. But then we will plan another trade entry later on. All right. And for the larger degree story, this is still uh, minor wave 4 towards 25, and then we are going to see a minor wave 5 towards 3100 going forward. Okay, the cash market is closed, but the futures, all right. Now it is just an enhancement of the fifth wave. That's what it looks like. We've done the wave theory in details last time when we met, so I'm just taking a Fibonacci extension and retracement. I think we have been waiting for entire last week, planning for a trade entry, correct, if you remember? And the limit order that we placed was around 43 800, 700, or maybe 43 500 and 4400, 44,000, sorry, 43,000. So now it is all happening, and to enter around this price would not be absolutely incorrect, but if you enter partial right now and partial somewhere around the 43,900, it's okay, but 200 points is not going to make a difference at all in Dow Jones. Stop loss, I would suggest kindly, according to the chart, please be above that high towards the 44,000 mark. So we sell here 43, 700, 800. We stop around 44,000, and that is the target, sir. It is 40,000 and 37,000 on the short side. All right. So that's a 10% decline, which the charts are telling us a story. And believe it or not, this could be just the beginning of a major, major, major degree corrective drop. It could be 1 degree higher than the minor, but at least even if it's a minor degree drop, uh, you really, you'll be amazed to see where the profits, or where the price action could actually go and settle down. All right, so it's we've got to touch base with five waves down, and then a pullback and another 5 waves down at a minute degree. So, and we will unfold each story. Right now, the first wave of minute degree is complete. The second wave is underway. So three more waves of minute degree complete. That would be just one wave of the larger degree. So if you imagine where the prices are heading, it could be like a crazy thinking at this point in time. But we will unfold, or we'll follow each cycle as it is unfolding. All right. Okay. Did I show VIX last session? I remember we touched base with the VIX as well. And we also discussed that the VIX is inversely proportional to the stocks. Now, since the cash market is closed, maybe we are not seeing any action here. But tomorrow, make a note that the instrument is VIX volatility index. It is tied up directly with the SPX 500, and this is what is the projection for the volatility index. And when the volatility index is higher, that means when there is high volatility, you tend to see the stock markets crash. This is just one example of August 2024 crash first week. I can zoom and show you a number of such peaks. That is March 2020. See that peak? So ideally, we are going to go above that price. This VIX index is going to go above that price. And amazingly, surprisingly, most of the traders don't realize this. VIX actually bottomed out in July 2024, way, way, way ahead of the stock markets, which topped somewhere, somewhere, I think November, December 2024. I don't remember exactly, but it was after the VIX bottoming out. So eh, these charts really, really communicate with us. The only thing is we need to understand it. That's all. Okay, Bitcoin. I'm really, I'm not going to say buy it right now because being a technical person, I know what the fifth wave. It's very tricky now. So if you are on the long side, the only humble suggestion that I would like to make is remain, move your stop to 99. All right, there's always going to be opportunity if it declines and takes you out, but at least you're not losing money. And if the story is going to continue, we'll try and pick it up again. But right now, getting on the long side with a target of 115 is not a good risk reward ratio at all. Imagine 99 stop and 115 or 120 target. It's almost 1 is to 1. But if you are still inclined with a 1 is to 1 risk reward ratio, your stop loss has to go directly just below that. Today, Tokyo Sydney opened low right there. All right. And I believe, I don't know what Ethereum was doing. It was lagging behind in the last session. It's still lagging behind, sir. So I think this is still a good pickup. It's 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 wave one, wave two, and then again one and two, or maybe it's a triangle. Whichever way, I think this one is a good pickup. We've already entered around the 31 on that drop. That was a limit that we I think we were waiting for that corrective decline. The stop loss goes just below the 29 mark, so that could be wave one potential, wave two on the lower side, lower degree, and wave three could extend towards 4300, 4300, 4500. So this is still a good pickup. Solana already completed its rally. Let's see, is it if it's still extending or it's it could still extend. It could still extend, but let me zoom out. Is it the drop was corrective, right? It looks to be a corrective drop. So, but tell you what, if you're buying, the stop loss has to go just below that low, around 229, because buying at, see, it's like buy low and sell high. That it's as simple logic as it can be. There's no rocket science. It's plain logic. Anyone can understand. Buy low and sell high. So we don't want to go opposite of that. Your stop loss needs to go just below 229 if you're inclined to buy. But I would not really suggest Solana. Maybe Ethereum is a better pick. And finally, Ripple. Okay, it is. There's no change. uh, our friend Ripple is towards 3.7 and it's already 3.34 now. Maybe some more high is left. Let's check out what the RSI is. I think it should be showing bearish divergence in. Look at that. Now this is an indication, sir. We are at or very close to a top. And I repeat in quotes, this is a strong indication of we are at or very close to a top. So if you haven't done anything, it is better to stay away rather than try and catch these 4 points from 3.3 to 3.7. You never know, the Fibonacci ratios may not hit because it happens. I've seen it happening. It's rather, if you're traded, I would suggest take 80 to 90% profits of the desk. Lock your profits also so that you don't lose in case you stop out just below that 2.79 mark. But if you're not done anything, it's better to wait. We will get another opportunity. The story is always unfolding. It never stops. We are going to leave our bodies sometime, but these instruments are not never going to stop. All right. So please don't think that we missed the bus. Another story is just about waiting to unfold in a short while. We will always try and pick up that one. Always. Okay. So that brings us to a pause of the New York Live. We'll be back in a few more hours to touch base again or continue stories where we leave right now in the Tokyo Sydney overlap. Once again, thank you everyone for tuning in and back to my friend Ego. Thank you very
Th
much.
Thank you, SPDas. Always a pleasure.
Yeah.
Hey, you over there. Did you like the video? Maybe you like the post. Re Repost it. Go to solana.forex.com, solana.forexlens.com, and we'll be back for more at 7 p.m. for Sydney, Tokyo, SPDas, and then we start the whole process all over again tomorrow morning with London, New York, New York Part 2, and then again the day after, and the day after, and the day after, and the day after. So looking forward to seeing you there. I hear my beagle barking. Now then, alrighty.